Hello and welcome back to Dukas Coffee TV, where I have Francesca Beausang from BMI Research on the line to discuss the current and future outlook for South Africa. Francesca, welcome. Now, business confidence for Q2 came in much lower than expected at 43 points compared to the previous reading of 49. What factors dragged the index down and what are you expecting for Q3?
I'd say the main reason for the drop in business confidence in Q2 was a drop in the confidence amongst new vehicle dealers and retailers, because the building and manufacturing confidence remained flat. I think ultimately that the low confidence is due both to electricity shortages and the weakness of demand. Those are the two main factors, and they're actually quite sort of representative of the supply and demand side blockages in the South African economy. Now, this outcome is actually quite in line with our growth outlook, which is below 2% in 2015 and 2016. For Q3, we're looking for confidence to fall to 41, which would be moving it further away from the 50 mark of Q4 2014.
Manufacturing and mining production data for April was released earlier today. Was these figures in line with your expectations?
I mean, I think that this is very much in line with our long-term outlook for South African growth, and manufacturing is 17% of growth. So we're looking at 1.9% in 2015, same in 2016. There's really four factors that are driving the low growth in our view. And essentially these are low foreign demand, low credit expansion, electricity shortages, and the threat of strikes in the context of wage bargaining. And the electricity story is very much symptomatic of the general freeze and structural reforms. And in a nutshell, reforms are the only way to lift growth at this point because potential output is so low. And there's very little in the way of signs that reforms are improving, hence our dire sort of outlook there. Demand side is also problematic because consumers are still paying off large debts that they incurred in the pre-crisis boom. Therefore, credit is very low. And of course, by tightening, the ZAR is only going to worsen this problem.
Now, the South African rand has fallen significantly against the dollar this year. Where do you expect the South African rand to stand against the dollar in the short to medium term?
I mean, in the short term, there's obviously supportive technicals and a hawkish central bank that could foster a short-term appreciation, but our view is that really the medium term there's more depreciation to come against the dollar, and you've got of course, given the economic outlook and also given the vulnerability of the rand to a large current account deficit, which obviously will become more difficult to finance as the Fed starts to normalize policy. So, in terms of our 2015, we forecast, in terms of averages, 2015 average is for 12.2 or so, and but for 2016, perhaps moving towards 13.
Francesca, thank you very much for your comments. We'll click back for more interviews coming up throughout the day. Goodbye for now.